Good afternoon, everyone. Welcome to the Mind Action Series Mathematical Literacy webinar on taxation, presented by our author, Tamara Ridgway. Please note, we will be recording the webinar and we will share it with the attendees afterwards, together with a presentation and notes. If you have a question, please type it in the chat box and we will notify Tamara that there is a question to be answered. Thank you and enjoy the webinar. Over to you, Tamara.
Thank you. Thanks, Roselle. Hello, everybody. Good afternoon from a rather cold Cape Town. I trust you are all warm wherever you are over South Africa. Yeah, this topic, it's been around for a while now, as we all know. And I just want to preface this workshop by saying I am by no means an accountant. I did not study this, all of these tax things. And it's certainly not something that I have a vested interest in. So I'm coming at this from oops, there's my dog, she likes to talk, sorry, from a purely mathematical literacy teacher's point of view. And I hope that today what I can offer you is maybe an unpopular opinion way of going about it, but certainly an alternative. And perhaps in some way enhance your teaching of, tax. Please, if you do have any questions, I can see the chat now, so feel free to pop them in. I'm happy to stop and rather answer your questions as they come, as opposed to you possibly forgetting them and asking sort of right at the end. Yeah, I think that's it. So here we go. As always, the first thing I do is I look at the CAPS document. And what I'm just noticing is that the animation is not working. Can someone please confirm, like, you can already see all the red circles and all of that? If you just let me know in the chat. Yes, okay, thank you so much. Okay, well, there goes the animation. Thank you for your response. We'll just work on this. I hope it's big enough for you anyway. So the CAPS and what it has to say about tax. Firstly, I'm just getting it slightly bigger because apparently there's lots of things happening on my screen. Okay, the first thing it says at the top there is that in grade 11 already you can be working with UIF. And I would certainly recommend that because this has become a much bigger section over the years. And there are so many intricate parts to it that our students are finding it very overwhelming, understandably. I find it very overwhelming, so I can certainly understand why they do. So if we are already doing some of this in grade 11, I think that will just sort of ease the burden in grade 12. At the same time, I know that many schools opt to actually teach the tax in grade 11. I always reserve it for my grade 12s, but certainly can offer some of the bits of calculations in grade 11 already. So we see that we need to be working with UIF. And then what it also says there, and just to reiterate what Roselle said, this PowerPoint and any additional things will be available to you basically as soon as the workshop is finished. So you don't have to scribble anything down. It is at your disposal. Develop an understanding, so that next block there says develop an understanding of why UIF is deducted, the benefits to the employee, and the responsibility of the employer. Investigate through calculation how UIF values are calculated as a percentage of gross income. Then it goes on to say that we must work with the following documents. Okay. Pay slips, tables containing income tax brackets, and income tax formula, tax deduction tables issued by SARS. There is IRP5 forms, personal income tax to be completed by employees, net pay, and tax rebate. So again, these are all the things that straight from CAPS we do need to be doing with our students. To develop an understanding of the following terminology is gross income, taxable deductions, taxable income, non-taxable deductions, and then lastly what you see on the bottom of the page is determine an individual's taxable income, personal income tax, and net pay. So that is quite a mouthful already. So just to lighten it as we are continuing, every now and then I've chucked in a joke. The downside is, of course, that I can't see if you're laughing or not, but I hope at least somebody else found that funny like I did. So thank you, love the emojis, thank you. I love it. So here's my potentially unpopular opinion, in that I don't teach it all in one. It can be taught all in one, but I personally just find it very overwhelming. So what I do is I have broken it up into 6 sections. The first is just general. Then I talk specifically, and this is how I've designed this PowerPoint for you today, specifically around just income, then just tax deductions, then income tax, then more deductions, and then net salary. So those are the areas that I've taken everything and sort of put them into those sections where we talk about it, we do actually calculations and examples around each one of those, so that when that number 6 comes, when that actual final calculation comes, where they need to maybe just calculate the net salary, they've done all these little calculations separately, but understanding how it fits into the bigger picture. So that's my approach. I'm going to start with general. So this is lots of talking, but at the same time, interaction from the students. What is this whole tax thing that we need to get focused on? Tax is money that gets paid by individuals and businesses to the government of a country. Why? For healthcare, for transportation, for education, for security, for social welfare. These are where our tax money is going. This is where our tax money is going. Okay, and again, get the students to kind of engage with this, even if it's just in conversation. Every year, the Minister of Finance presents the budget. This budget outlines how the government will use the money generated from tax. And I've been so fortunate in that I always landed up teaching this topic round about when the budget speech was coming out. And so it was so relevant to the students, and they could listen or watch nowadays on their phones things that made sense to them, and they would be excited. They'd come to class and say, "Oh, ma'am, I heard this, da, 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 da," and I knew what they were talking about. The image here is just a nutshell. Again, they come out every year with stunning images that summarize everything to do with the budget speech. And it's worth unpacking again with your students. I don't like to rush this because I think if they get a bigger picture, then they'll understand all the smaller parts of that picture. The budget shows the total government expenditure for the upcoming financial year. We all know that. How this expenditure will be financed and the projected income the government expects to receive. Now, when you hear that or maybe read that, it might sound like it's actually exactly the same thing. But there's two parts to it. There's a part that says what is the projected income, and then there's a part that says financing the expenditure. And I apologize up front that some of these slides look text heavy, but the animation is not working. So that's why. So projected income is an estimate of how much money the government expects to collect during the financial year. And they expect to collect that money through income tax, VAT, custom duties, corporate tax, and then other fees and fines. So that's what they think they're going to get in. But then there's another part to the budget, which is financing the expenditure, which is how the government plans to pay for all the things it wants to spend money on. And that might be from the projected income, but also from borrowing money, selling things the government owns, or any savings or reserves that they might have. So an example would be if a student wants to buy something, okay, and their projected income is how much money they think they're going to make. But if they only think they're going to make 1,000 Rand and what they want to buy is 1,500 Rand, then how are they going to finance it? Where are they going to get that other 500 Rand from? Maybe ask their parents for a loan or something like that. And so straight away, we are really, really just getting our students to think it's not just about the money coming in, because that can even be applied. We know we're teaching this in this context in grade 12, but when in grade 10 we're doing budgets, we can even think about it then. And then I always like to show an up-to-date chart to my students, a graph of some kind that just really summarizes the revenue. And so again, income, trying to expand all their vocabulary, the revenue of South Africa's money, the budget, and show them visually that 75% of South Africa's revenue comes from personal income tax and VAT. That's a huge amount, 3/4. And that is currently holding thumbs and toes at 15%. So this graph alone, you could set a whole exercise just on this graph alone, which shows you all the corporate income tax versus the personal income tax. And again, get conversations flowing around that. So who pays tax? We're still under general. Okay, so who pays tax? If you earn money in the following ways, you will need to pay tax on it. And there's a whole list of all the different ways that you can get money in. And then what's always interesting and sparks a beautiful discussion is, did you know you don't pay tax on lotto or gambling winnings? I'm just going to leave it at that. I'm going to let you explore that, or maybe ask your students to go and explore that further. Okay. Oh, there we go. I just saw a message pop up. Yes, that I found that very interesting. That doesn't mean there aren't any tax implications, but I'll leave it at that. Okay, so let's just delve into, before we go specifically into the income part, let's just talk about South Africa's tax system. The South African tax system has been designed in a way so that you pay income tax in proportion to what you earn, and so we call that pay as you earn. Now, the information on this slide is all going to be elaborated on more in the slides that follow. Unemployed, or if you earn less than a specified amount, called the threshold, you do not have to pay any income tax, but the more you earn, the more you pay. Income tax is calculated on your gross salary, but there are certain deductions which would make your taxable income less. But by just sort of introducing this concept, because like I said, we're going to go into it more, but just introducing this concept, I'm getting them familiar with all the different vocabulary words that are really, really going to be thrown around. The company you work for will automatically deduct these amounts from your salary, calculate your income tax, and pay it over to SARS. And then it was in the CAPS document, each taxpayer is responsible for completing and submitting an IRP5, which shows all their income, expenses, taxes, everything like that. And then I like to show my students an IRP5. Now, I'll admit, I don't spend a lot of time on this because it's not relevant to them. So they can't really visualize. They're still in school. All they're worried about is finishing matric. So they can't really engage with this as much, an IRP5 form, as much as what they will one day when they're actually working and they have to do their taxes. But it's just good to show them. I have made these images hyperlinked, so you can click on them and go directly to the website where I got this example from. And there's other things that are with it that you could include, exclude. It's there to use to make your life easier should you so choose. Okay, so IRP5, what does it look like? And when is it used? So all of these conversations, they're just general. They just, hey, we pay the government money. This is what the government does with it. And this is how we can make sure that we are giving the government the right amount of money. Then we get into the nitty-gritty. So then I spend some time and I just talk about income. Told you I broke this. Was a lot of information. So yeah, this one I can particularly relate to. Now, income, I broke up into 6. Is it repetitive? Potentially. I think it depends on how you approach it. I intentionally wanted to emphasize the difference between monthly versus yearly, gross versus net, and then we've got bonuses, and that this all sort of culminates in what is called the taxable income. Now, I didn't, because these are fairly straightforward, and I think any teacher that's teaching at a grade 11 or 12 level can elaborate on these, okay? Bonuses, the only thing I would go into more with bonuses is, you know, it can be a 13th check, it can be a bonus in a different form, and that it gets added on to your 12 months of salary. So any 13th check, any bonus that does come along, it's part of your annual income. And I forgot what I was going to say now. I lost my train of thought. Okay. The taxable income, I was going to say something about bonuses. Oh, yes, that was it. If, again, I stress this with my students, and I would really encourage you to do the same. If the information is not given, they mustn't worry about it. Because if any question is going to want them to include a bonus, they would give that information. Because often I found my students would say, oh, but what about bonuses? Is there a bonus? Or, you know, is there this? Or is this tax deductible? You know, where is it? If it's not given, they don't have to include it in the calculation. As simple as that. And then after we've spoken about all of these and they feel quite comfortable with it, then we go into taxable income, which is your annual gross salary. They now know exactly what that means, minus your annual deductions, which we're still coming to. But at least it's telling them in the meantime that's coming. Now, thanks to my new best friend, we've been getting to know each other for a few months now. You might have also met ChatGPT, you know, a new friend. This is, so I'm not taking any credit for this, okay? I just have learned what to put in to ChatGPT, but I asked it to generate an exercise based purely on those concepts. And again, these will all be in Word form so that you can fiddle and delete and do whatever you want. In Word form, these will also be shared with you along with the PowerPoint. So some of them, like they've got to match the columns there. It's very small on my screen. They've got to match the columns, and I thought that's lovely to really make sure that my students understand the different questions. And hey, you could even put it into a test if you really wanted to. So that's it. Any questions so far? I know it's very straightforward on just general and income. All right, then we get to tax deductions. Okay, now this I broke up into 3 areas. So we've got pensions, retirement funds, and then donations. I have realized not all teachers teach or mention donations, but I do think it's important that we do, because they could creep in at any time. So I learned a lot when I was researching this a while back. I learned the difference between pension funds and retirement annuities. So, hey, you might be looking at me and saying, like, doesn't everybody know that? Well, I didn't. Okay. I didn't know that pension funds are through an employer. Okay. You have to go through a company because the company deducts it automatically from your account, from your salary, into the government funding. Okay, I wrote it there somewhere. It's coming up. But retirement annuities are completely private. Now, we have already, previously to this, at least I had already taught retirement annuities. So they have an idea of what it is, but now it's quite nice for them to see how it all fits together. So tax deductible refers to the amount of money that an individual may subtract from their gross income before calculating the tax. Only very specific things, as described by SARS, may be deducted prior to calculating the tax. And of those things, we have pension, retirement, annuities, and donations. Those are what may be deducted. And the reason why the government is happy, because you are looking after yourself for the future, okay? You are preparing for your retirement, and so they want to reward you for that, and so you pay less tax if you are contributing towards your retirement. So pension and retirement annuities, both monthly contributions. Yeah. When it comes to the retirement fund calculation, okay, the maximum amount an individual may deduct prior to calculating the tax is 27.5% of their annual taxable income. You see, by now they're very familiar with all these words. So you can just say, call them for what they are, or of their annual remuneration, whichever is the highest amount. However, this amount may not exceed 350,000 Rand. So the best way to do this is, and now I'm only focusing on one aspect, is examples of how this works. So I have two examples. Okay. Oh, yeah. Pity about the animation. I must be doing something wrong. Anyway, it doesn't matter. Ashley earns 20,000 Rand per month. She contributes 2,000 per month to a pension fund. That's all I'm dealing with. I'm not bringing in a whole lot of other things. I just want them to understand this, and then I'll keep building and building and building on those examples to include bit by bit. So by the time I get to the end, it's really not a big deal. So the annual income is 240,000 Rand. The annual contribution is 24,000 Rand. So we can use those two to work out the percentage. And we see that 24,000 is 10% of her annual income. 10% is less than 27.5%, so it is acceptable. Instead of paying tax on the full 240,000 Rand, her annual income, Ashley only pays tax on 216,000 Rand. You could have, of course, worked out, and again, I'll show my students this, you could have worked out what 27.5% of the 240,000 Rand is and just compared that to the 24, either way. And then another example, okay, Ashley, I've just used her in all of the examples. Happens to be my daughter's name, so it was easy. Ashley earns 1,600,000 Rand per year and contributes 500,000 to a pension fund and a retirement annuity. So it's a joint. In this case, I worked out 27.5% of the 1.6 million and I got 440,000. Now this is more than the 350,000. So Ashley may only deduct 350,000 before calculating her tax. So instead of paying tax on the full 1.6, Ashley pays tax on 1.250, 1,250,000. And then we get to the third thing, which is tax deductible, and that's donations. Just like retirement funds, the government wants to encourage people to support charities. A tax-deductible donation is a donation that an individual gives to a charity, but this charity must be registered and approved by SARS, and an individual would need very specific paperwork to prove that they have donated. So donations to friends, family, or informal causes do not count for tax deductions. And then I love these conversations that you could have around this. There's a maximum amount of 10% of the income. And I tell my students, because otherwise, the loophole would be that everybody is, that you want to donate your whole salary, and then you wouldn't have to pay any tax. So it's important that there is a limit. But, again, do you think there should be a limit? Is there a limit? That's some beautiful conversation. So let's look again in isolation. I'm very aware this I told you this is my choice. In isolation, I'm just focused on these calculations. So Ashley earns 300,000 Rand per year and donates 40,000 to a registered charity. So again, you could tackle this two ways. So calculate 10% of her earnings, and that's 30,000 Rand. She's donating 40,000 Rand, so she may only deduct 30,000 Rand. She's donating more than her allocated 10% from her income before calculating her tax. So her taxable income is 270,000 Rand. Okay, so just to recap, we did tax deductions. We looked at the 3 and different calculations, different understanding of the 3 things that you can deduct before working out your tax. Right, so then we get on to income tax, and this is going a lot faster than what I thought it would. I'm sure as tired teachers, you are very glad. Okay, so we're moving on to number 4. Just a reminder, there were 6. My goodness me. And this is now the income tax. So this is where I believe the focus should be, where I believe the intention behind students, Maths Lit grade 12 students understanding how to calculate their own tax was really around the tax tables. It was, see, because I thought I'd be talking for so much more. Is there a standard percent for a pension deduction? So pension and annuities are treated as one. And so the standard percent is 27.5%. So whether it's your pension, your annuity, if you don't have a pension, or the combination of the two, it cannot be more than 27.5%. Jason, I hope that answered your question. Thank you. Okay, guys, like, can I please at least have one laughing emoji here? I mean, it might be a dad joke, but still, thank you. Okay, there we go. Don't leave me hanging here. I mean, it's bad enough we're on screen. I can see nobody. I might as well be talking to my wall. So it's just lovely if there's some interaction. I know you're still there. And I actually teach online, so you'd think I'd be used to it. Okay. All right, then we get into income tax. So again, thank you, Tsepo. Thank you. Okay. So I break this down into the 3 parts. Okay. This is, if you've been teaching Maths Lit since the beginning of time, and I recognize some names, so hey, to those of you that I know. We have been teaching it since the beginning of time, and these are the three things that we always taught. Okay. All right. Okay, so we've got threshold, we've got the tax tables, and we've got the rebates. Now, just take for a second a moment to appreciate how much information your students have already taken in. All this vocab, all these little bitty things, okay? So now, by this stage, they should be, I'm hoping, they're confident and comfortable determining the taxable income. All of that stuff was just to get them to a place where they now know what amount they need to go to the tax tables with. Okay, can we then deduct the max for pension retirement fund and the 10% for donations? Yes, there are two separate things that you can deduct, yes. So can we deduct the max? Yes, but again, if I'm understanding correctly, I want to rephrase it. The max you can deduct is 27.5. But I suppose if one wanted to really push it to the max, you could find pension and annuities, pension and annuities to the value of 27.5%. Lwazi, again, I hope that answered your question. Charlotte, excellent question. So this all, excellent, Lwazi, this all comes from the updated tax section of my book. So it has been updated, and we are looking to, I think, maybe Rizal or Sheila, if you're on, we are looking to do a complete update, not just on this section, okay, although this I've done this section, a complete update 2026 for publication in 2026. You know, because Masslit is so relevant. And it's amazing. I mean, I feel like I've just updated the books the other day, and it's been like some of the information's 5 years old already. And it's like crazy stuff. So, yes. Oh, well, Charlotte, it would be lovely. No, they are for publication 2026. All of this is included in there. Okay, so let's have a look at this threshold. I found this beautiful table. It's a website called TaxTim, and I've been going there for years because I just find so many useful resources there. So this just shows you a whole summary of the tax threshold. So now again, we're introducing new vocabulary. How do I sort of present this to the students? Well, if you do not earn much money, the government does not require you to pay any income tax. That's good, okay? Every year, the Minister of Finance publishes the amount called the tax threshold that you need to earn before you need to pay tax. The older you are, the higher your tax threshold. Now, there's two things that I always draw my students' attention to when it comes to the tax threshold, and that is that the amount is in isolation. So it's one amount that you'll go to based on your age. That's it. Okay. And the other thing that I draw their attention to is that these amounts are all based on the annual taxable income. Just to refresh their memory, annual taxable income. Okay. And the reason why I point out to them specifically at the tax threshold is one amount is because obviously when it comes to rebates, it's not. They need to add. And I would rather point out from the beginning, look how these two are different. Okay, then we get threshold. So here's the, again, in isolation, intentionally, Ashley's an 80-year-old who works part-time. How much must her taxable income be per month before she needs to pay income tax? So take the threshold of the relevant age divided by 12, and Ashley must have a taxable income of more than 13,807 Rand and 42 cents before she starts paying tax. Basic, just, I mean, it's literally just one example, but I wouldn't just do one example with my students. I would do a few examples until they're really comfortable with threshold, and it's not a big deal at all. So when they see the word in a question, they're like, oh yeah, I know exactly what that is, and they know how to work with it. So threshold, then we've got tax tables, okay? And again, although we love that our students have scientific calculators, and you know, a lot of our students do, it is very important to just remind teachers, particularly maybe those of you that are new to MathsLit. If you are, welcome. Hello, nice to meet you. Any student should be able to complete the MathsLit exercises, tests, final exams with a pocket calculator, a normal little pocket calculator, not a scientific calculator. So if you cannot complete a sum on a pocket calculator, then that sum or question, let me be mathematically correct, that question does not belong in a MathsLit paper. And that is why we don't compound, total side note, that is why we don't compound more than maximum 3 years. We don't compound to the power of 10 because you can only do that on a scientific calculator, and that disadvantages any and all students that don't have one. Okay, so I point out that there are 3 parts to this calculation. It is a calculation that involves addition, subtraction, and multiplying, and you must take note of all 3 parts. So the first example that I would go through with them is Ashley has a taxable income of 300,000. No meat, no frills. You get the idea now. So this means she falls into the second bracket. So now, first we subtract, okay, that income above. First we subtract, then we multiply, then we add. Of course, we could do it all in one. Anyway, which I'm always going to encourage my students to do, but we need to think about the calculator situation. Okay, so we need to be able to do it in 3 parts. And I'll tell you what else. There have been questions in the past in final papers where parts of the calculation have been filled in and students have had to fill in parts. And if they only see it as one, they're going to battle to identify the 3 parts to the tax table calculation. So whether they do it in 3 steps or they do it in 1, they still need to know, well, if they do it in 1, they still need to know there are 3 steps to it. Okay. All right, then we get on to rebates. Just in case your mind went off, we're focused only on the income tax. Okay. Cool, thank you. We will focus only on the income tax. We are on the income tax, and we've done threshold tax tables, and now we're going to go on to rebates. Okay, so rebates are like a discount from the government. It is a way the government can reduce the amount of tax you owe them. Everybody gets the discount. I cannot but think of Oprah. You get it, you get it, you get it. Okay. Although that might be lost on today's generation. That shows my age. Okay. Thank you. If you are older than 65 years of age, you get extra rebates. The government uses rebates to make sure they are being fair to the older generations and to the people with lower incomes who need their money to afford basic living costs. The amount of the rebate may change every year. And again, here's this beautiful table which gives you a wonderful summary of the amounts that the rebates have been over the past few years. All right, here's an example. Ashley is an 80-year-old who works part-time. How much is her rebate? So here you can see that because she's 80, we are adding 3 amounts to it. Okay. And after Ashley has calculated her tax, she may subtract 29,824 Rand from it, thus reducing the amount of tax she needs to pay. I love this first one, this joke about the Prime Minister. Okay, then there's 2 graphs there. Thank you. There's 2 graphs there. Okay. It took me a while. Like I read it and I was like, what? And then I got it. So yeah. Oh, attendance. Oh, I missed that. Okay. Rizal, I'm glad that you are monitoring those chats there. Okay, there's a beautiful graph. You can decide based on your class. I mean, if you want to bring it in at all, but when you bring this in, because it's a graph that shows you how the majority of the income tax is coming from the minority of the population. And again, I'm happy to send the links for all of this, because yeah, I think it's stunning that they see that 60% of the total income tax revenue is from less than 1 million people in South Africa. All right, just in case you've gone for coffee and you've totally forgotten what we're doing, we are looking, thank you so much, appreciate that. We are looking at the different parts of taxation, which is huge. I know it is huge, but I took the decision to break it up into smaller sections and make sure that my students were comfortable with each of the smaller sections. So we are now on to more deductions. So by now, my students are confident. They know all this vocabulary, okay? They know how to and what to deduct prior to working with the tax table. They know how to get the taxable income. Then they take that taxable income, they put it into the tax tables after comparing it to the tax threshold, and then deducting the rebate. So they're happy with that. Now we get on to more deductions, which is where your medical tax credits, more deductions, which is where your medical aid tax credits and your UIF come in. And this part, I think, is where a lot of teachers don't feel confident or comfortable anymore. Okay, so medical aid, this is just a discussion. There's nothing, they need to know that when there is tax issues, when you're working out your tax, that the medical aid does come into it. Okay. So what is medical aid? It's a type of insurance that helps people pay for medical expenses. It's a monthly premium. And even though the monthly contribution is not tax deductible, it's not one of those three things that we spoke about, not tax deductible, it will still be deducted from your gross salary when determining your net salary. So your medical aid contribution, if your employer is paying it for you, it will come off your gross salary. So really, I want to say, don't shoot me down for this, I want to say your medical aid payment doesn't have anything to do with your tax. It just decreases the money in your bank account. Okay? But it does have a direct impact on you because of medical tax credits. So as another way for the government to reward you for reducing the burden on public healthcare facilities, because you've taken the initiative and you have looked after, you've joined a medical aid, so you looking after your health, they give you medical tax credits to taxpayers that contribute to a medical aid. The amount is based off of how many people, you and your dependents, are covered by the medical aid. And then your UIF, and again, I'll go into these. UIF stands for Unemployment Insurance Fund, and this is a South African government insurance fund, which enables a person that becomes unemployed or unable to work due to certain circumstances to claim some money from the government each month. And this also has a limit. It is 1% of the gross salary. Just give me a sec. Thank you. This UIF is also just a nice conversation to be had. When can you claim for UIF? I didn't go into it, all of this. You don't have to. It's not a sort of a testable thing. So I don't know how focused you are on the finals, but it's not just a case of, oh, I'm unemployed, I can claim. Like, you have to have been contributing to the UIF when you were employed in order to claim it when you are not employed. And if you get fired from a job, the students, I don't know why they think it's funny, oh, it's unfair, da, da, da. If you get fired, you can't claim UIF. So there are sort of strings attached to it. Okay, so medical aid tax credits. The main member, vocabulary, the main member is the person who has signed up for the medical aid and who pays the monthly contribution. They are also known as the primary account holder. A dependent is someone the main member adds to the medical aid cover. This would typically be a spouse and or children. And the medical tax credit for 2026 is that you can deduct 364 Rand for both the primary and the first dependent. So let's say a husband and a wife to be traditional. And then if you had 4 kids, you could deduct 246 Rand for each of your dependents, each of your 4 kids. And because, sorry, I know I sound like a broken record, but because of how much you've done before this, the kids know, well, hopefully they know you're at the end part now. So you've worked out the tax. You've already done that. So now we're gearing towards these other deductions are gearing towards working out your net salary. And then we've got UIF. Oh, no, wait. Oh. Oh. Okay. The PowerPoint I'm looking at is different to the one that's on your screen. Okay. We'll make sure we send you the same one. I'm going to talk through UIF. I don't know why that happened. So UIF then, okay, all employers who work more than 24 hours a month, just by the way, in case you didn't know that, okay, must contribute 1% of their gross salary to this unemployment insurance fund. However, there is a maximum of 177 Rand and 12 cents, which can be deducted. So if you're 1%, and I had an example here, okay, again to show you, if your 1% is higher or more than 177 Rand and 12 cents, then only 177 Rand and 12 cents can be deducted. It is also compulsory for your employer to also contribute the same amount. So the maximum that is being contributed is 2%. And again, you can, do a calculation or so with that. But just in case you didn't know, only the 1% reflects on an employee's salary slip. Only the 1%. And it appears under deductions with the heading UIF. I have an example. It's bizarre. Okay, the only reason I'm not too worried is there really aren't a lot of slides left. Okay, so again, then I took UIF, I did calculations, just make sure that they're comfortable with sort of how to work out medical aid tax credits, how to work out calculations, and also thanks to my new best friend that I described earlier, also some exercises generated specifically on these different things, which I will forward on to you. I'm sure Rizal will upload anything that I give her to share with you. The medical aid tax credits. So, Lwazi, that formula, I've also seen it floating around. Thank you. I've also seen that formula floating around. I'm going to be honest with you. I don't use that formula. I suppose the formula is taking this monthly amount and multiplying it by 12 to get the annual amount which you may deduct. But something about that formula that you've typed there, it didn't make sense. I thought, well, it's not as clear cut as that. That was my my finding of it. You see, because you can't. Yeah, okay. I'll leave it as at that. Then the last thing, which, and again, because we've done so much, really the last thing is is the, and I promise you there are slides, is the net salary. And this doesn't have to be a big thing anymore, because you've done the first part. If I am very broad and I break it up into three, you've done the first part of knowing how to calculate the taxable income. You've taken the taxable income and you've worked with the tax table. And then the third part is, after you've worked out the tax, these are the things I can now take off. So I've got my gross salary. I deduct now the tax I've worked out. I deduct the medical aid tax credits. I deduct the UIF and anything else. So what I do, which I didn't include in here, is I'll do the little bits in class. I'll just so much, and then I'll give them one calculation, one question, which has everything that it could possibly have. So it's got a bonus in the form of a 13th check. It's got every deduction, the whole thing. And you could even give that, I mean, there's a lot of calculations to it. You could literally even give that as like a mini test. I wouldn't, because I think it's way too much, and the kids get so stressed anyway. But I would give it as one exercise with one big question, and that's tax. That is the tax. The net salary is just taking all of these amounts that they're comfortable working with and knowing how to deduct them. Any questions? Any other questions? I think Rizal will answer that. Now, I don't expect, thank you, I don't expect anything here to be new. It shouldn't be new. Maybe one or two like interesting facts like lotto winnings. But what I'm hoping that you saw was how you can break it up, but then how it all fits together again. That was my goal, was it can be super overwhelming, but it also doesn't have to be super overwhelming. Yes, I broke it up into 6. I broke it up into 6, but actually it's in 3 parts. When I was looking how to structure it, I started with the 3, and then I thought I wasn't happy with the 3, and that's why I broke it up further. That definitely went a lot faster than I anticipated. That's it. I really, really hope that you took something from it. I really hope you stuck around for the full hour. Charlotte, let me answer your question. Would they ever have to work out how much tax for not only the annual salary, but bonus too? Do they need to understand that the tax is paid over 12 months? Yes, yes, I think they do. They do, because I've seen lots of questions which say calculate the monthly net salary, in which case you then need to take all your annual things and divide it by 12. So yes, definitely they can ask that, Charlotte. And that even though that's why having that sort of mini part on bonuses is nice, because they're getting taxed on 13 salaries, but they're paying that tax over 12 months. Oh, that's a pity, Rizal. Thank you, Charlotte. The SACE. Yeah, awesome. Awesome. Rizal, I'm finished. Nobody seems to have any more questions. Thank you very, very much, everybody. And if you have any questions, oh, wait, I did see, thank you. Oh, you see, all of this was filled in and now it's not. So very weird. But please, my email address is, I'm going to put it in the chat. You are more than welcome to. Thank you very much. I'm so appreciating the love being sent my way. There we go. Awesome, Jason, thank you. I appreciate that. Everybody, I appreciate that. Thank you very, very much. And if you have any questions, I promise you I'm really happy to answer them. Like I said, this is from the updated section of the textbook, so it is happening, and I look forward to you working with an updated book as soon as possible. I saw, Rizal, you answered them. I didn't read what it was. Awesome, Charlotte. Brilliant.
Yes, thank you so much, Tamara, and thank you so much for the time that you took today to do this presentation. And I'm sure everyone really enjoyed it and, very grateful for this. So thank you so much. Just to chat to you guys about the updated books. So we will launch the sample copies of the revised grade 12 during 2026 for ordering by schools to use in the 2027 school year. So, but yeah, that is the plan. And Tamara is very busy with another project as well. So as soon as she's done with that, then it's over to updating these books, and we'll get them to you as soon as we have the copies available.
Yes, exciting stuff. But I did, because I knew that this section, lots of teachers were asking, and I appreciate everyone that has been working with it without it being updated, but promise you the updates, hopefully you got an inkling of the updates and how awesome they're going to be. So yes.
Fantastic.
Have a lovely day further. Enjoy your evening, everybody. Oh no, Kaledi, the e-books become available at the same time as the actual, because we print it first and then we convert that. So they go together, hand in hand. Sorry. I'm right, hey, Rizal?
Yes,
yep.
Correct, 100%.
Okay, so hang in there. All right, everybody, thank you so much. Have a lovely evening. Stay warm. Goodbye.
Thanks, Tamara. Bye, everyone.